Good afternoon. This is Sharon Lewis, and today we're here to talk about one of my favorite subjects, which is how to go from have to go. We're going to talk about one of my favorite subjects, tax savings, to better business growth, building a smarter financial strategy for your business. The idea is to maximize your growth in your business while minimizing the amount of money you give your government. I mean, let's just say we all want to pay only our fair share of taxes and nothing more, right? So today, we're going to talk about why tax planning matters. And just to give you a little bit of information about me, I've been in the tax world for over 25 years. The tax practice, LBS Tax, I've been with them for over 22 years. So this is an exciting, opportunity for us to actually present this material to you because we have a lot of expertise within our firm. We have a CPA who also has about 22 years of experience. We have a EA candidate who's got about 10 years of tax experience in addition to other industries that he's worked in. So we all come in with some great business knowledge to share with people, especially business owners, because we see what happens and what goes right and what goes wrong. And we like to talk and reflect on that. So let's talk about why tax planning matters, because this is one of the areas that frustrates us because so many people don't make a tax plan. Let's talk about this. You plan your vacation, you plan how you're going to spend your money, where you're going to go, what you're going to do. Why do you not plan what you're going to give to the IRS? So let's talk about what those things are. Tax planning impacts your cash flow and profitability. They're not just a year-end concern. If you're sitting there waiting till December 31st, the year-end closes, I can't do anything after the fact to change the direction that you're in. You're going to owe what you're going to owe. But if we're looking at this throughout the year, and especially in quarter four, which is what we're in right now, we can actually adjust the sails to the shift to get you back on course to where you want to go. With proper tax planning, you have more funds for reinvestment. That could be tax planning to reinvest into the business. It could be investing in retirement plans. It could be lots of different things. It could be taking money out to do things that you need to do within your family. But if you don't know what the planning is, how are you going to actually achieve that? I'm sorry, this is Take Your Dog to Work Day, and he heard the doorbell. So hopefully he will stop in his tax planning. Oh, thank you. I got the delivery of a soda. This is exciting. All right, so let's go back to tax planning. So with retroactive planning, you can avoid surprises and redirect your money towards growth. To give you an example, if you save $20,000 in taxes, that's savings for new equipment and employee, or you're budgeting for marketing for the next quarter. To give you an idea, one of my clients went out and bought some new trucks after talking to me in November. We talked in November of whatever year this was. He went and bought new trucks. That ended up being $60,000 savings because of how he structured things. But had he not talked to me, he may not have bought those new trucks. He may have waited till January to buy them. But he knew to get them done and get them done before the end of the year. So it also prevents unexpected liabilities. Actually, my entire staff hates the telephone call that says, hey, by the way, you owe $20,000. Then we pull the phone away from our ear when we anticipate people yelling at us, and we're cringing because we don't want to make that phone call. But if we know in advance that, you're going to owe money, I can make a plan for you as to A, how that money's going to be, or B, you're going to go, yeah, I know, we've already talked about this. We've done this, we've done this, we've done this, and that's my fair share. And then you pay your fair share. But this way you're not surprised. One of my friends was talking to me the other day that he was pretty annoyed that the CPA he was using, he ended up owing $11,000. He's yet to be able to talk to that CPA. And when this is being recorded, this is October. He filed his taxes in April. He still doesn't understand what happened in his business as to why he owes so much, because his tax person is only doing after the fact. accounting. He's not doing advisory. And advisory allows you to see and make these tax strategies. So let's talk about tax saving strategies. I mentioned a couple of them already just in the first slide, first slides. Leveraging deductions and credits. Buying vehicles at this time of year could be a benefit to your business. Now, I'm not saying run out and go buy some vehicles because Sharon said to do that, because it may not be the best interest of your business. And also how those are structured affects what you need. And especially if you're going to go buy vehicles that puts the financial health of your business in jeopardy, that's not a good choice. We've also seen businesses buy vehicles that don't qualify for deductions because they wanted, this particular vehicle. And it's like, well, that's great, but you actually don't get a deduction for that. So we like to look at that. The other thing is retirement plans. Whether you're a solopreneur or you have people working for you, what retirement plans would allow the business owner to have the most tax savings and also put money aside for retirement? We also have depreciation and capital allowances. Those are things like right now, there's some great R&D, research and development, tax credits out there. But unless you know about them and know how they can apply to your business, you can't take that into effect. So that is actually a problem for so many business owners, is that they don't know that things that they're doing could actually save them money. And if they talk to somebody in advance, there are strategies that we can use to minimize that for you. Business structure and optimization is another one of them. Making sure you have a tax efficient structure is one thing. We see so many solopreneurs being taxed the wrong way, that they're paying $30,000, $40,000 in taxes, when in fact, had they talked to us and given us ample time, we can reduce their tax savings from that, $40,000 maybe down to, 10 to 15,000. But again, we have to talk about strategy and structure. Also, depending on what's going to happen, if you're going to be an industry that's in a fast to grow industry, you might not want to be an LLC. It might be in your best interest to actually start your business off as a corporation, but you don't know that unless you actually sit down and talk to somebody. So these are important conversations to have with the person that does your taxes. You want someone who does advisory for you. And these are the things, if you're going to do your own research, these are the things to research so that you know how to handle them so that you make the right strategies. We hate having to tell people that they owe all these taxes when they never had a chance to plan, or if they just structured things a couple of different ways, they could have kept money and not given it to the IRS. So it's really frustrating for us to do that with people. The next thing is from savings, we can create growth by not giving that money to the IRS. We can create growth within businesses. Tax savings are only powerful when they're reinvested strategically. So let's say that again. Tax savings are only powerful for a business when they're reinvested strategically. So if I can save you money on taxes over here and you put it into the right type of marketing, or if you put it into the tech, or actually getting that assistant that frees you up so that you can actually go and service your clients, that's super important, because that allows you to delegate the non-money making work so that you can focus on the things that actually produce the money. The other thing is diversifying streams of revenue. And I'm always cautious about saying that, because I don't want you to turn around and go out and do something that costs you money to diversify your stream of revenue. Okay, I'll give you an example. There's a wonderful book by Michael McCallowis called Pumpkin Plan, and he talks about a guy who's his landscaper, and in areas where it gets cold, the landscapers don't have any work after, probably right around this time of year. They do the final seeding and stuff like that for the year end, and then it's going to get cold, the grass is going to die, the gardens are being harvested, all of that kind of stuff. And so what happens in that business is the guy said, you know what, I'll do leaf cleaning because all the leaves are falling from the trees. I'll do cleaning of the gutters for everybody. And so the guy went and bought all that equipment. And then he said he'd do snow removal. Well, he diversified himself, got so much debt that, his business almost failed because he had all these other things instead of focusing on what he could do to offer other things to his clients or using that time to, reinvent his marketing. So we want to be careful when we diversify streams that we're not spending money in specific areas, but having somebody to talk to that understands your business and what's going on in the marketplace is important. Strategic expansions are important. Maybe having a leaf cleaning business, is great. And then when you're done doing leaf cleaning, you can do Christmas light hanging, and that gives you, October, November, December, and January, because you got to take the lights down. That gives you revenue for those particular things. So there are things that could be, strategic, plans. I was talking to another business that was actually talking about developing a software because the software that they were purchasing to use in their business was terrible. It didn't work in line with what their industry was. They did both physical and mental health. Well, the software that they use either does mental health treatment and billing to the insurance companies, or it does physical health, but it doesn't combine. And their clinic does both physical and mental health. And so they were actually looking at a billing software and developing that. That would actually be a strategic expansion, but we probably would have spun that off into a separate company. And then they would have been, so we talked about some of those different things. She decided to put that on the table right now, but it's something that she's considering for the future as things happen in their marketplace. So we want to keep that in mind. Remember that if you fund marketing or technology, those upgrades grow your business. If you expand your team, you're hiring new skilled labor. If you diversify your revenue streams, you could be bringing on a new service plan. So those things allow for additional growth in your business. But if we don't know what our numbers are and we have them planned accordingly, we can actually do these things and keep that in mind. The next thing about growing your business and tax planning is cash flow management. And this is actually one of the things that's really dear to my heart because I've been in business for 22 years. I've actually seen not having enough cash. In fact, when I first started off and hired employees, I didn't get paid in November and December, and sometimes even half of January because my employees had to get paid. Well, that is terrible cash flow management. And I have an accounting degree, right? Well, I learned through different systems that I use how important cash flow is and forecasting. I knew every year that our revenue goes down in December. People don't want to talk about taxes in December. They actually are busy doing their Christmas and holiday stuff, their end of the year stuff. They're doing their vacations. If they're physicians, or doctors, they're working because their patients have met their deductibles, and they're busy servicing those people and taking care of them and then trying to celebrate a little bit of holidays. So they're not thinking about, planning out their business at that time of year. They're talking about it more during the summer when that time allows for it. So we want to look and see what's happening in our business to be able to forecast whether it's when money comes in, whether money doesn't come in. The other thing is managing receivables. It is so easy for us to not want to make that collection phone call. I personally want to hire, that's one of my things, is I want to hire someone who will call and say, hey, I need, this amount of money on your bill. Well, or what if you actually have people prepay for the service? People who are doing the Christmas lights, maybe you want to have them prepay for, the setup and the takedown, because after Christmas, they're going to go, oh, I'm broken, I can't afford to pay you. Well, if those are your lights on the houses, you're only going to get paid if you get them down. So there's different things to keep in mind, and you want to balance out and forecast your money. And so we actually have different systems in place that we use. Remember, profits don't pay bills, cash does. So just because your profit and loss statement at the end of the year shows that you had a profit, that doesn't mean there's cash available to spend. In fact, there's a saying in a group that I hang out with that the equation is wrong where it says income minus expenses equals profit. We're saying, you know, income minus profit equals expenses, because then what's left is to spend, and there's cash at the end for profit, because, or at the beginning, because you've actually planned for that profit. And that's one of the things that we work on in working with our clients. The other thing is managing your receivables and payables to optimize liquidity. For our business, we get all of our cash, or the largest portion of our cash, during tax season, because we see so many of our clients in that time frame. But you know what? That's also right after that is when all of our big bills are due. So keeping that in mind, we have we have them scheduled to come out that way. But you know what? It's also kind of disappointing because we come out of tax season busting our butts. And now the bank account is empty because we just gave it all to the software companies that we utilize, the vendors for our insurance, the vendors for this, the vendors for that, and all that money is gone. Well, what I discovered this year is, what if I start prepaying into a savings account the money for my software? So I'm not coming up with this large chunk and seeing that big amount of money in my bank account go from this back down to this, because I spent it all on the things that are annual renewals. If I maintain putting aside money all year round, I can actually manage my cash. And when that big pocket comes in, I can actually maybe reinvest that in a different way. And so that's one of the things that we've done to manage our payables a little bit better, so that we can actually optimize liquidity and stay more liquid throughout the year. But also, I timed my vendors correctly. I knew that I didn't have money to pay for, software, in February, because we're just ramping up for the year, because that's when our crunch of our business comes in. So I scheduled that all up for May so that it all came out then. So keeping in mind, working with vendors to be able to do those things creates that ability for savings. The other thing is, use tax savings to maintain working capital. If you're having to have to pay taxes, you don't have working capital because you're pulling out that, my one client, he pulled out that $11,000 chunk out of his business to put into his personal account to give it to Uncle Sam. Well, there went his working capital. So there was no ability, during the summer to go and do anything fun, because he was giving all that money to the IRS. So there was no extra money for expansion, for repairs, for any of that kind of stuff, because that money came out because he didn't know it was going to be coming out of his pocketbook that way. All right, so let's talk about financial frameworks for smarter decisions. Budgeting and forecasting. So there are two different things. A budget is actually setting aside how much money you're going to be spending on things. So if I anticipate that my software is going to be, $10,000, I can turn around and set aside $10,000, and knowing in which month it's coming out. Forecasting is actually projecting what your sales are going to be. I'm going to forecast that based on doing these things, our marketing has worked in this area. We're going to forecast, and then we're going to set our budget according to what that is. So if we bring in these more sales, I might need to bring on another person. If we bring on more sales and I have to bring on another person, I have to buy another desktop or another laptop. I have to buy this, I have to buy that. And so we want to look at those things. The next thing is something called key performance indicators, or KPIs. And that's things like gross margin and how you compare to the industry. So if your industry, there are industry average guides out there that we utilize here at our firm, that we can look and see, okay, what is the average for, plumbers, and what's their average income, and what's their average expenses, what's their average turnover for, accounts receivable, how long does it take for people to pay them? And then how does that compare to what's going on? In our business compared to what the industry is, and seeing what's happening. And then also, what is the owner's goals? If the owner has a goal to grow by 10%, or maybe they just want to stay status quo, everything is running smooth, they just want to keep more money. I mean, that could be a thing that is like, look, we're busy enough. We really don't want to grow. We don't want to have any more employees than what we have right now. Or maybe you're a solopreneur and don't want any more, but you want to minimize where money's going. You want to maximize the profit coming out. You want to minimize the time you're spending, and you want to look at how we can utilize those things. Those actually help in the cash flow and also allow us to plan if we're looking up against those key performance indicators. But we need to see what we have to have good records to be able to see where we are to be able to achieve those things. The other thing is scenario planning for both taxes and growth. One of them is for our industry, we already know that we have a lot of competition coming up with software. We're seeing a lot of people going to these AI-driven softwares that supposedly are as good as we are. And we know from using AI for the last 10 years in our business that the AI is only so good and that we really do need humans involved. But we've planned for losing a certain amount of clients for that type of thing. And then how are we going to replace those clients? Because we've looked at what those strategies are, and then we've looked at what we want to do in our business. So in certain areas like where what we're seeing in the economy right now is that the economy is slowing down, especially with the budget situation going on with Congress right now. A lot of business and a lot of people aren't spending money. But what industries are continuing to grow? Is the restaurant industry continuing? People still wanting to eat out because they're busy? Is it the fast food segment that's growing? Is it the smart, quick food segment that's growing? Home repairs, is maybe the remodeling is stopped. So we're going to switch over to our marketing message being about home repair so that we can target that and then plan for growth based on what it is, because those are the things that we look at. Sometimes you might be in a fast growing industry, such as software, or like the MSP marketplace. If you're in that area, you're seeing more and more risk going on. So there's a chance for your businesses to grow because businesses have to spend money on maintaining their computer systems. And people need to spend money on buying the software that works for their industry. But if we don't plan for that, we end up making quick, fast decisions that may not be in our best interest, because you just say yes to get it off your table or no to get it to go away, but you're not looking at that. The other thing is what happens if revenue drops 10%? Are you overemployed? Do you want to keep that employee because the industry will turn around because they're great employees? Do you have cash flow set aside for that? I actually had that conversation a couple of days ago with somebody who says, my business dropped the last 2 years, but I'm projecting it to go up because these are the things that we're doing. So we talked about the growth and that, he's got the right number of employees to have the company grow by about $500,000. So he's targeting that and visualizing that $500,000 growth. Now, how are we going to get him there? And so that was what we were talking about. So we want to see those things and plan for those things. There are tools that are part of the planning that are part of your overall business strategy. And by the way, profit is not an event. At the end of the year, you made a profit. Profit is actually a way of life in your business. And so, we actually plan for profit. We plan to take your business to the next level. Even if that is the next level is just you working fewer hours. Those are the things that we look for and try to help people go through. Let's talk about risk management and compliance. One of our things is that we really don't want to do audits. We do audits. We represent people before the IRS all the time. Very, very few of them are actually our clients that the IRS pulled one of our clients for audit. That doesn't normally happen. But what I've learned, and because Liz is a former IRS auditor, what we know is that the IRS loves documentation. So let's say that again. The IRS loves documentation. If it's not documented, it didn't happen. So mileage logs, that is the biggest deal. If you drive someplace for work, for your business, You must have a mileage log because I can tell you right now, if you're deducting miles and you're selected for audit, they are going to ask for a copy of the mileage log, you know, right off the bat. Now, I can tell you how to recreate one from the backside, but I don't like doing taxes like that. I don't like having to have to clean up afterwards. I want to make it clean going forward. So doing cleanup is horrible. We recommend that you have good records, and that actually helps you avoid audits. The other thing is having separate bank accounts. I always tell people, you are not your business. If you don't have a separate bank account for your business, and you don't pay your personal bills from your business account, those are the big things. In fact, I won't even take you on as a client anymore if I know you're mixing funds because I don't want to deal with the compliance issues. I don't want to deal with sorting that out. The risk level is way too high. The other thing is stay compliant. Even if you don't have the money to pay the taxes, file on time. I'd rather deal with collection letters than deal with the penalties and interest that compound at multiple levels when you haven't filed. If you don't pay, you're only paying one penalty called the failure to file penalty. If you don't file and pay, you're dealing with the failure to file and failure to pay penalty. And so now you're double penalizing yourself because you were afraid of the IRS. Don't let that happen. That's one of the things that we can do here is help people when they are in that situation. So always stay compliant with federal and state regulations. You're better off owing them money and working out a plan to pay them versus jeopardizing and owing them, 4 to 5 times as much as you would have because you didn't pay. The other thing is make sure you have the right insurance. Going through and I was talking to another business the other day. They don't have board insurance. So they have a board of directors and the board's not covered. So when they make decisions, because there's no policy in place, the board's, if anything goes wrong, the board's not covered. I was talking to, a cottage bread maker, a baker, a cottage baker. And we were talking about she delivers bread to farmers markets and some other places that she actually needs to have a rider on her insurance to, cover her vehicle. And that we talked about, this type of insurance. And some of these are just small policies, $1,000 a year, but they'll protect her and her assets because she does have a house. And so this is important to make sure you have the right insurance, even if you're a tiny business. The other thing is that, if you're dealing with computers, do you have cyber insurance? Do you have client, data with, credit card numbers, dates of birth, anything like that? We've seen everything from the big stores, like Target and healthcare companies. Hell, even the IRS has been audited. Been hacked. So keeping that in mind, you need to have cyber insurance in place. Talk to your insurance agent about that to make sure, because there's nothing that's going to take you down faster than having a breach of some sort and all your cash going to pay for the lawsuits or the cleanup of that effect. So if you have an insurance policy in place there, and you're following the rules, there will be, a level of protection that keeps your cash in your business even when that happens. And make sure you're reviewing them annually. If you have an insurance policy that only covers 3 computers, but you have 5 in the business, you've lost 2, if we have a storm come out. And even here in Phoenix, we had a microburst a couple of days ago that took out the front window of one of our clients' offices, cost $40,000 worth of damage. He's now going to deal with the insurance company, but at least he knows he has coverage. So making sure you have the right insurance is important for you. Best tips and practices. Number 1, start planning early. That's why we're doing this in October, not December. We want to talk to you. We want this to be out in front of you early. The earlier you get on board to make a plan, the better, whether it's you're going to make your own tax plan, or whether you want to work with a firm that does advisory and planning. That's what we're here for, to help guide you through that plan. The next is making sure you have accurate records. Just because you're using someone to do your books, how do you know they're doing them correctly? How do you know these things are being fixed? You know, I was working in somebody's books. They wanted me to put a transaction in. After about 4 hours of research, what they wanted can't be done based on how they're doing things in their business. I turned around and explained to them. I provided them with the work papers behind it. But I can tell you, had they gotten someone who was less qualified to do their books, somebody would have put that on there and it could have triggered an audit for them because of that. So making sure you have somebody qualified and you're keeping accurate financial records is important. The other thing is use cash flow management tools. We are really big on utilizing a system called Profit First. That is one of the things that's actually saved my skin during the last 8 years of being in business. Even during COVID, when times got tough and tight, we used Profit First, and it really kept our skin in the game. When that year we had lots and lots of business, but so many people weren't paying, they were calling for free information and help like that. And we actually had to change our business model because we can't keep doing what we were doing that year, but we were trying to be helpful because everybody was scared what was going on. One of the things that we do in our cash flow management is I have an account that is just for taxes. So that money, I have money coming in every month and a certain amount gets set aside for taxes so that in April, when I file my taxes this year, I will have that cash set aside to pay Uncle Sam, or I'll have prepaid it in through my quarterly taxes because I set money aside and then I can pay that on the strategic times when when I'm required to do that. The other thing is use technology. How about having your books in the cloud? We use QuickBooks here. We actually don't support any other tax software or bookkeeping software right now. We are looking at another software called Kick that is showing some promise, but right now we're big on that. The other thing, I was talking to a financial advisor, as a matter of fact, is use your phone. My phone is linked to my company's QB, QuickBooks Online account. I take a picture of a receipt when I'm out and link it right to my QuickBooks so that I have it recorded. I don't have to worry about keeping one of these pieces of paper and worrying about, did I get it scanned? Did I do anything like that? I actually can upload it right away and I don't have to worry about it. And so those two things are fantastic. The other thing that we do is we use a cloud dashboard for our reporting processes, and we use a portal service. So having these tools available so that people can actually download their stuff, upload their stuff, it's right there. What are those tools, those types of tools would make your workflow better for your business? And then how much time would some of that stuff eliminate because things could be done more automated than having a person involved? And then remember, you want to work with professionals. You're an expert in your business. I don't know much about auto mechanics, running computer businesses, doctors' offices, from the sake of running them. I know the financial side of those things, but you're an expert in your business. We're the experts in maximizing financial potential. Let me say that again. You're the expert in running your business. Doesn't matter what industry you're in, you're the expert in it. We're the experts in maximizing its business potential. That's what we want to do. We want to maximize your financial potential and help you grow your business to what you want it to be. All right. Some tools and technology. As I said, we use accounting software that's online. We use QuickBooks. We're moving some people over to Kick to try that out. There's also Xero and Zoho books that I know people who support. Tax automation tools, Gusto for your payroll, ADP for your payroll, Alaveris for your sales tax. If you're doing sales tax, if you're running an online store, this is fantastic to be able to do your taxes through one of those softwares if you meet those those credentials. Also, don't do payroll by hand. It is way too hard, way too complicated. One mistake. Use a system that takes care of it and does it for you immediately and takes care of it correctly. The other thing is using dashboards. We have an online dashboard tool that helps us monitor KPIs and financial health. We actually link it. If you want to do it yourself, there's some softwares that you can utilize to do that. Remember, automation isn't replacing an accountant. It's empowering better decision making. So if you switch to some of these softwares, it doesn't replace the person that you're using for advisory. It helps them help you make better decisions. That's just pretty much how that works, is having as many tools and the most information available helps you make better decisions. If you're making a decision about whether or not you should, what should I pack for a trip? We look to see what the weather forecast is going to be while we're there. We just don't pack the same clothes that we're wearing at our home base, because if I like me, I'm in Arizona. If I pack to go to Chicago today, I'm going to freeze in, a short sleeve shirt and a pair of lightweight pants. I'm going to need something warmer. Well, it's the same thing. That's the tool that I'm using, is checking the weather. The same thing. It didn't mean that I don't need a weather forecaster anymore. I still want him to tell me what's going on so that those software apps are making real and live decisions. So keeping that in mind is relying on the professionals actually help us. They save us money. When you just talk to your investment house, that doesn't necessarily mean something. I can tell you horror stories. Like, one of our clients last year pulled money out of his retirement account to buy a new vehicle. The problem is had he had talked to us, we could have saved him the taxes. He went from having a very low tax basis that year because of some different strategies, but because he didn't talk to us, he ended up having to pay taxes because he paid cash for that car from the retirement funds, thinking that he was saving himself money, when in fact he ended up costing himself about $7,000. So tax planning and talking about those things, saves money and keeps it in your pocket instead of giving it to Uncle Sam. Here is my contact information. I'm Sharon, as I said, and the best way to get on my books is to actually reach out to the admin, not to me directly. Telephone numbers right there. Our website, you can actually book an appointment right through our website. And the one question I want to leave you with is, you plan your vacation. Why are you not planning your taxes? I hope you got all the wonderful information out of this. Have a fantastic day.